So guys, long back better we did standard costing. Let us first revise it better once. Standard costing. So the whole objective of following standard costing better is to ensure that you can compare your actual cost with the amount of standards that are set by the organization, and then guys see what are the reasons for those variances, variance analysis, so that rectifications of such beta can be done and the company can try to stick to the original standards. For this purpose guys, as said, variances are segregated into two categories, favorable and adverse. Anything that is contributing to the profits of the organization beta would be a favorable variance. Anything that is having an adverse impact on the profitability beta would be an adverse variance. Yes or no guys? Based on other classification beta, I said we divide the variances into cost variances and revenue variances. Yeah, then beta I also said there's another classification called as controllable and uncontrollable variances. Any variance that arises on account of an external factor as such beta which is beyond the control of the organization will be called as an uncontrollable variance. Otherwise beta, if it is on account of factors which are within the control of the organization, that will be called as a controllable variance. Now under cost variances guys, we have variable variances and fixed expenditure variances. Variable expenditure mein we have material variances, labor variances and variable overhead variances. Any variable expenditure variance, let that be direct material, let that be labor, let that be variable overheads guys, arises on account of two primary reasons. One is the efficiency of the utilization of resource, the other one is the amount of money that you are spending on that resource. Alright, efficiency matlab kya guys, how well are you utilizing a resource. Let me just go back to bachpan mein jate hain. So here guys, back to bachpan. So any variable expenditure variance arises on account of efficiency, arises on account of expenditure. Efficiency is the amount of money that you're spending on that resource. Expenditure is the amount of money beta that you are, how well are you utilizing beta is efficiency, how much are you spending on that resource beta is expenditure variance. In order to measure efficiency variance, whether it is material, whether it is labor, whether it is variable overheads, everywhere guys you're going to compare what should be the standard utilization and compare that with actual utilization. Efficiency variances are always measured at standard cost. Alright, that is why beta you write your standard utilization minus actual utilization into standard cost. That is for efficiency variances. Expenditure variance के लिए beta you're going to write actual standard cost है साथ beta minus actual cost, जो भी difference in prices है beta, that multiplied by actual utilization. Under material variances guys, the same thing is segregated as material usage variance and material price variance. Your overall material cost variance as such guys will be standard cost for actual output minus actual cost incurred, SPSQ minus APAQ. याद है ना? We are segregating that into material usage variance and material price variance. Material usage, the name itself indicates better that it is on account of usage of raw material. That is why we compare standard quantity for actual output minus actual quantity. Multiply that by standard price. Any efficiency variance is measured at standard cost, so you'll have to multiply by standard price and not with actual price. Material price variance, the name itself suggests, but are you supposed to take differences in prices? So that is why you will write standard price minus actual price, multiply by actual quantity. All right, guys. Now, based on whether the company is following single plan or partial plan guys. Single plan is where the company is recording variances as and when they arise. Partial plan beta is where the variances are recorded after the finished products are manufactured. So based on that guys, we have two concepts of material price variance. You can either compute material price variance based on consumption or you can compute it on the basis of purchases. Yaad aa raha hai kuch? I said by default if they give us actual quantity purchased as such guys, you are going to compute material price variance based on actual quantity purchased, not based on consumption. But if that happens as such guys, your overall material cost variance ke liye you cannot use formula. You have to separately add usage variance and price variance, because usage variance is still based on consumption but price variance is based on purchases. So add material usage variance and material price variance to arrive at material cost variance. If material price variance guys is based on क्या बेटा consumption, then for overall material cost variance I can either use the formula guys or I can also add material usage and material price variance. Clear about this? Now, if at all you have more than one type of raw material as such, guys, more than one type of raw material, you segregate your usage variance into two categories: sub-usage variance and mix variance. Sub-usage variance is also known as yield variance. Now, because this is classification under usage variance, all of this will only be dependent on actual quantity consumed, never based on actual quantity purchased. AQ purchase comes only for material price variance, will not come for any other category. So your material usage variance beta will be segregated into sub-usage variance and material mix variance. One is on account of total quantity of raw materials that we are using, guys. The other one is in the proportion in which we are using the raw materials. If the raw materials are being used as per standard proportion and there is still a variance, that will be on account of sub-usage variance, quantity की वजह से. But अगर quantity same है, but you're changing the proportion in which you're mixing the raw materials, guys, that will become material mix variance. Example beta, say to make a liter of tea as such, guys, normally we add 600 ml of milk and 400 ml of water. ठीक है? What if you add 500 ml of milk and 500 ml of water, guys? Station chai. Yes or no, guys? Station chai मतलब वही तो रहती है ना बेटा. Sorry, 100 ml of milk के साथ बेटा 900 ml of water. If you do that as such, guys, are you not changing the overall cost? यहाँ पे quantity is still same. Earlier also it was 1 liter, now also it is 1 liter. But the proportion in which you are mixing the materials are changing as such, guys. Will that be material mix variance or sub-usage variance? Mix variance. समझ में आ रहा है नहीं आ रहा है? What if I am using them in standard proportion 6:4, but I still use a higher quantity? Sub-usage variance. In a given question, you can have both sub-usage variance as well as mix variance. To compute sub-usage variance and mix variance separately, we have introduced a new term called as RSQ, Revised Standard Quantity. Revised Standard Quantity beta is total actual quantity consumed in standard proportion, standard mix. So in order to compute material sub-usage variance, you will take SQ minus RSQ multiplied by SP. So no, फिर बोलो. So SQ minus RSQ क्या होता है बेटा? SQ is total standard quantity in standard mix. RSQ is total actual quantity but in standard mix. When you take a difference between these two, you are not taking a difference in proportion. You are taking a difference only in quantities. That is material sub-usage variance. For material mix variance, beta, you write RSQ minus AQ multiplied by standard price. You have the formulas in front of you there, beta. RSQ is total actual quantity in standard mix. AQ is total actual quantity in actual mix. दोनों total actual quantities है, but one is in standard mix, the other one is in actual mix. That is why when you take a difference between them, beta, you are basically taking a difference in proportion and not a difference in quantities. ये हो गया material variances. You just have to remember material cost variance segregated into usage variance and price variance. Usage variance further segregated into sub-usage variance and questions में बेटा standard quantity for actual output compute करना है. We will never compare standard quantity for budgeted output. Second question में भी तुम लोग गलती किए थे तब. The minute I started, you computed standard quantity for budgeted output. I said it is not supposed to be done. You're always supposed to compare actual cost with standards for actual output, not with standards for budgeted output. Also, there can be loss given, standard loss. For every 100 kgs of input, if I tell you normal loss is 20%, that means per 100 kgs of input, I'm supposed to get an output of 80 kgs. Either they directly give like this or they mention that for 100 kgs of input, output is only 80 kgs. Unki marzi, how are they giving that loss? But if at all they give actual output, we're always supposed to first compute standard quantity for actual output. Are we clear about this? Material price variance again by default based on purchases or based on consumption? Purchases. But I said, guys, exam mein to be sure, you will also write alternate answer that if it is computed on the basis of consumption, this is the answer. Yaad hai nahi hai? Also, beta, there was one question in when purchases were given, but they also gave us details of opening stock and closing stock. I told you, beta, the fact that the value of opening stock is given, they are expecting us to compute material price variance also on the basis of consumption. That is why in that question we did not do it on the basis of purchases, we did it on the basis of consumption. Yaad aa raha hai kuch? After that, beta, we moved on to labor variances. Labor expenditure is exactly like material expenditure, guys. You can also turn pages, beta, refer karo taki kuch to yaad aaye. Labor variances, guys, is similar to material variances. Yes or no, guys? Because it is also a variable expenditure. The labor variances that we did in class, beta, is applicable if labor is paid on the basis of time. ठीक है? You are paying labor on the basis of number of hours that they are working for. This is where we have four primary terms: standard hours for actual output, actual hours, standard rate, and actual rate. Your overall labor cost variance is still the same, guys. It is standard cost for actual output minus actual cost incurred. So that will be standard hours for actual output multiplied by standard rate per hour minus actual hours multiplied by actual rate. That is not going to change. Okay? That is overall labor cost variance. We are segregating that labor cost variance, guys, into two categories. One is labor efficiency variance, the other one is labor rate variance. मैं बोला बेटा you cannot change these wordings. ठीक है? The wordings should be exactly same. Labor efficiency variance is again utilization of resource. How will you measure efficiency of the labor in terms of time? Standard hours minus standard hours for actual output minus actual hours multiplied by standard rate or actual rate? Standard rate. Every efficiency variance should always be measured at standard cost. Labor rate variance ke liye beta we are going to write standard rate minus actual rate multiplied by actual hours. Alright kids. Now your labor efficiency variance will be further segregated into sub-efficiency variance or yield variance. That is one. Or gang composition or mix variance. This also arises if and only if you have more than one grade of labor, more than one type of labor, not more than one labor. It should be more than one type of labor. Okay, beta? Now, here guys, sub-efficiency variance measure करने के लिए we introduce a new term called as RSH, revised standard hours. How do you compute RSH? Total actual hours in standard mix. Therefore, sub-efficiency variance beta is SH minus RSH multiplied by standard rate. Labor mix variance beta, gang composition will be RSH minus AH multiplied by standard rate. Standard questions that come from this beta, three categories of labor dega: skilled, semi-skilled, unskilled. They will give us abnormal idle time also. I'll talk about that in a second. Either they will tell us what is the actual output that got manufactured as such beta during the entire week, using which beta we will have to compute standard hours. याद आ रहा है ना? In a week we produce 1800 units, so we take that 1800 units as the base and recompute what is the standard hours for actual output. If I mention in a week of 40 hours, unless otherwise given, every worker is working for 40 hours. All right. If there is abnormal idle time, guys, your overall labor cost variance will be segregated into three categories: labor efficiency variance, labor idle time variance, and labor rate variance. Labor efficiency variance is still based on actual hours worked. Labor rate variance is still based on actual hours paid. The difference between actual hours worked and actual hours paid will come as idle time variance. All right. Unless otherwise given, AH worked is equal to AH paid. Agar efficiency come hai, that is not abnormal idle time. That will be taken care by efficiency variance. We are all sitting in the class as such beta every day for 8-9 hours. Yes or no? Is the efficiency of every student same? So there is efficiency variance of every student beta. Thodo ka favorable hai, majority adverse hai. Jo bhi hai. But what if I am outside as such beta, I do not come to the class for 1 hour as such, guys? What will that become? Idle time variance. That will not come under efficiency. Because class mein kuch karne ko tha hi nahi na beta. So that will come under idle time variance. Are we clear about this? So if at all they say beta in a week of 40 hours, 2 hours were lost due to power cut. What are you going to do? Take actual hours worked as 38, take actual hours paid beta as 40. The difference beta 2 hours will come as idle time variance. Any doubt in that? समझ में आ गया? Labor sub-efficiency variance or labor mix variance, guys, will still be computed on the basis of actual hours worked, not on the basis of actual hours paid. क्यों beta? Efficiency measure कर रहे हो, guys. If the company has no work, will you take 40 hours or will you take only those 38 hours worked? 38 hours worked. ठीक है? After that, guys, what if labor is paid on the basis of number of units? We did not do this, guys. It is not even covered in our syllabus. If labor is paid on the basis of number of units manufactured, there is no such thing called efficiency variance. To hell with their efficiency, because anyways it does not matter whether it's working for 1 hour or whether it's working for 40 hours. All that matters is how many units are you manufacturing. So the only variance that arises is labor rate variance. There can still be a difference between standard rate per unit and actual rate per unit, but there cannot be a variance on account of efficiency. Are we clear? After this beta, we moved on to variable overhead variances. I said variable overhead variances, guys, are similar to labor variances. Variable overhead will not have any efficiency variance, guys. But because we measure variable overhead variances based on labor hours, because of inefficiency of labor, we can also have variable overhead efficiency variance. Instead of taking 2 hours, if the labor takes as such, guys, 5 hours to manufacture a product, Are you not incurring variable overheads also for 5 hours? समझ में आ रहा है नहीं आ रहा है? So the inefficiency of the labor is causing variable overhead efficiency variance. Overall variance, standard hours for actual output, actual hours. Same for labor, same for variable overheads. The only thing that changes here beta is standard rate per hour and actual rate per hour. याद आ रहा है? थोड़ा बहुत हाँ. Anyways guys, so this overall variable overhead variance is still standard cost for actual output minus actual cost incurred. So you still write standard rate per hour into standard hours for actual output minus actual rate per hour into actual hours. You segregate this into two categories, efficiency and expenditure. Efficiency variance also same as labor beta, standard hours minus actual hours multiplied by standard rate. Standard rate, all efficiency variances at standard rate. Expenditure variance beta will be standard rate minus actual rate multiplied by actual hours. यहाँ पे देख के बोल रहे हो हाँ. One important thing that I told you beta is for variable overhead variances there's no such thing called actual hours paid. You incur variable overheads if and only if labor is undertaking work. So in a class of 9 hours as such guys, if there was no work for 1 hour in a week, the class अलग बात है, यहाँ पे variable overheads will be incurred. In a week of 40 hours as such guys, if there is no work for 2 hours, you will be incurring variable overheads only for 38 hours. You will not incur it for, that is why guys for both efficiency variance and expenditure variance, we take only 38 hours into consideration, actual hours worked and not actual hours paid. That is variable overhead. No segregation of efficiency variance because there cannot be more than one type of variable overhead coming into picture. Are we clear about this? After that beta we moved on to fixed overhead variances. Because this is a fixed expenditure and not a variable expenditure guys, the primary classification of fixed overhead variances itself changes. Fixed overheads guys, what we did was based on absorption costing guys. First, fixed overheads are supposed to remain constant guys irrespective of the output manufactured. हाँ या ना? However, because fixed overheads is still a manufacturing expenditure guys, it is absorbed to the cost of units that are being manufactured during the year. Even if actual expenditure is not supposed to change guys, can the amount of fixed overheads absorbed change depending on the actual output manufactured? I gave the example guys of a couple of people going to a cricket match as such better. Say 10 people decide as such guys that they will go to a cricket match. The expected rent is 2000 rupees. How much is every person supposed to contribute? 200 rupees. What if only 9 people turn up beta? Will you collect 2000 or will you collect 1800? पहले 1800 हो, बाकी का 200 extra collect करोगे बेटा, that is secondary. But first you are collecting only 1800. Now this is called as change in your variance, or variance is arising guys on account of a change in activity, change in volume. Instead of 10 people, only 9 people turned up. That is why I ended up absorbing how much less? 200 less in my example. I was supposed to collect 2000 but I collected only 1800. The second one beta is, what if the actual rent turns out to be 2500 instead of 2000? खेलना था 1 घंटा beta, say you played for 1 hour 15 minutes, 1 hour 20 minutes, you ended up paying a little more. So there guys, the extra expenditure that is arising as such beta is not on account of change in volume, it is on account of change in expenditure. So this is where beta you divide your overall fixed overhead variance into two categories called as volume variance and expenditure variance. समझ में आ रहा है नहीं आ रहा है? Your overall fixed overhead variance is still the same formula guys, standard cost for actual output minus actual cost incurred. However, the word standard cost for actual output is replaced with absorbed fixed overheads. ठीक है, it's easier to understand, इसलिए instead of adding standard cost we write it as what? Absorbed overheads. Standard rate per hour into standard hours for actual output minus actual rate per hour into actual hours. That will give us overall fixed overhead variance, under or over recovery of overheads, which we are dividing into two parts now. One is volume variance, the other one is expenditure variance. I said remember A, B, B, A. Abba, yaad hai na? Absorbed minus budgeted will be fixed overhead volume variance. Volume variance is the difference between what is the amount of overheads that you were supposed to absorb and what is the amount of fixed overheads that you budgeted to incur. Classic Pratik, आराम से सो रहा है. So ठीक है बेटा, absorb fixed overheads minus what guys? Budgeted. Continue बेटा. Sorry I disturbed. ये सब revision video में आएगा तुम्हारे को. You'll all remember who's Pratik बोल के. So absorb fixed overheads guys minus budgeted fixed overheads. Absorb fixed overheads कैसे compute करोगे? Standard rate per unit into actual output. This is the only variance beta wherein you can directly compute in terms of output. Expenditure variance beta is budgeted expenditure minus actual expenditure. Now our example, 2000 expected, budgeted हो गया है वो. How many people were supposed to come? 10 people. How many people turned up? 9. How much did you collect? 200 is volume variance. Are you not collecting 200 less because one person did not turn up? However, actual expenditure turned out to be 2500. How much is expenditure variance? 500. You were supposed to spend 2000, but you ended up spending 2500. We are spending 500 more. That is my expenditure variance. Overall variance 700. We collected only 1800, but we have to pay 2500. 700 short. That will become your overall variance, which we divided into this. समझ में आया नहीं आया? Then beta we did what can cause a change in volume. I said there are three reasons, guys. First is you are not working for the same number of working days. Second is you are not utilizing your capacities. Third one is efficiency. Instead of working for 25 days in a month, if I work for 24 days, will my output be less or more? This will be adverse. Yes or no? Instead of working for 8 hours every day, guys, in those 24 days also, what if I work for 7 hours only? Again, the output should reduce because we are not utilizing our capacities. In those 7 hours also as such, guys, the work that you perform was equal to the work of 1 hour. Then it is efficiency variance. Calendar, capacity and efficiency. In order to compute these variances, we have introduced a new term called as RBH, revised budgeted hours. Revised budgeted hours, guys, are budgeted hours for actual number of working days. कुछ याद आ रहा है बच्चों? In order to compute your calendar variance, guys, you will compare revised budgeted hours with budgeted hours. This is calendar variance. ठीक है? Why do we write revised budgeted, guys? First is if actual working days are more, it is favorable. If actual working days is less, it is adverse. So either you can write actual working days minus budgeted working days multiplied by standard rate per day, or write revised budgeted hours minus budgeted hours into standard rate per hour. The next one is capacity variance, wherein I will compare actual hours with revised budgeted hours. एक बार revised budgeted hours को budgeted hours से compare कर रहे हो, BH is out of the picture. Now you're supposed to compare AH with RBH. RBH. That will become what, beta? Capacity variance. So capacity variance is actual hours minus revised budgeted hours multiplied by standard rate per hour. Finally, beta, in order to compute efficiency variance, you will compare standard hours for actual output with actual hours. That's the same everywhere. That will give us efficiency variance. You add efficiency, calendar and capacity as such, beta, you will end up getting your volume variance. समझ में आ रहा है? Yes or no, guys? This is one variance as such, beta, मतलब category which you have to revise properly. है बहुत simple. But still it requires a little revision because it differs from the other variances. इसके बाद में बेटा, what if fixed overhead variances are based on marginal costing? There will be no absorption as such, beta. That means there will be no volume variance. Only expenditure variance will arise. Volume variance नाम का चीज आएगा ही नहीं. You will only have expenditure variance if it is based on marginal costing. Because under marginal costing, beta, fixed expenses are not included in the valuation of inventories. Only variable expenses are included. So fixed expenses will never get absorbed. If they're not getting absorbed as such, beta, there is no question of volume variance. There's only expenditure variance. Are we clear, guys? Yes or no, beta? After that, beta, we did sales variances. I said sales variances, guys, are not covered in your syllabus, but somewhere later, guys, in budgetary control, there'll be one question based on sales variances. That is why I have to do this. So under sales variances, guys, it is exactly similar to material variances, but because it's in relation to revenue as such, beta, instead of writing standard minus actual everywhere, we write actual minus standard. The word standard is replaced with budgeted. Your overall sales variance, beta, is segregated into volume variance and price variance. ठीक है? Overall sales variance, guys, will be actual sales minus budgeted sales. That is how you write it as APAQ minus BPBQ. कुछ नहीं बेटा, same as material, but instead of writing standard minus actual, we write actual minus standard. Replace the word standard with budget. It doesn't make sense to use the word standard when it comes to output which is beyond your control. That is why we simply use the word budgeted. All right. Volume variance and price variance. Volume variance is on account of change in volume. Price variance is on account of change in price. Just like material usage variance. There we wrote SQ minus AQ. Here you write AQ minus SQ. Replace SQ with BQ. Multiply by standard price or budgeted price. Material price variance क्या था बेटा? Standard price minus actual price. Here you're going to write actual price minus budgeted price multiplied by actual quantity. Are we clear about that? That is sales price variance. Sales variances can also be computed on the basis of margin, guys. Margin is the amount of profit that you're making. If you follow absorption costing, margin is profit per unit. If you follow marginal costing, it will be contribution per unit. ठीक है? exactly like sales price variances, but then better you replace prices with margins. Wherever you have price, you replace with that margin. One important point that I told you to remember better is, this is not there in your notes, I'll dictate it now. One important point that I told you better to remember is, for computation of both actual margin and budgeted margin, we take only standard cost, we do not take actual cost. मतलब budgeted margin guys, ये diagram भी यहाँ पे देखो, budgeted margin बेटा is equal to budgeted price minus standard cost. Actual margin is actual price minus standard cost. For both budgeted margin as well as actual margin, what do we take? Standard cost into consideration. Sir, actual cost क्यों नहीं लेते? I told you two reasons. एक तो sales department is no way concerned about the actual cost that you're incurring. They will only come and tell us, जाके production वालों को पूछ. Why are we asking us? We are not responsible for the actual cost that is being incurred. Our job is only to sell the product. Whether we are selling it at that price or not, we are responsible only for that. Yes or no, guys? Second reason as such beta is the difference between standard cost and actual cost is already explained under all the cost variances. Material variance, labor variance, variable overhead variance, fixed overhead variance. All of that collectively as such beta will tell us what is the difference between standard cost and actual cost. जैसे CA final पे बेटा ऐसे ही questions आते हैं. Overall cost variance is 1 rupee per unit, adverse बोलता वो. So you should know that this includes material, this includes labor, this includes variable overheads, this includes fixed overheads. सब में से एक आधा figure missing रहेगा. ठीक है, all backward calculations. You know what is material cost variance, you know what is labor cost variance. So you should know that the balancing figure will be overhead variance. Overall cost variance अगर 1 rupee adverse है तो. Are we clear about this? Yes or no? So for computation of both actual margin as well as budgeted margin, what are we supposed to take into consideration? Only standard cost. We cannot take actual. That's the end of standard costing. बेटा और कुछ नहीं था इसमें. Are we clear? Let's revise process costing, guys. Starting off, guys, I told you that this chapter is applicable, guys, when the manufacturing of a product as such beta involves multiple processes and the output of a process becomes the input for the next process. When you have multiple processes, the only problem beta is that you will have inventory lying at each stage. There will be losses occurring at each stage. That is why we will not be able to directly arrive at the cost of the final product. In order to value the final product, you need to value inventory at every stage. They say, after doing so many questions better, you must have realized that if you want to fix the selling price of the final product, don't you arrive at cost per unit of the final process? To arrive at cost per unit of the final process, you need cost per unit of all the previous processes. Only then you will be able to compute cost per unit of the final process. Are we clear, guys? The examples of industries where process costing is followed, beta, I told you that it is steel, paper, sugar. We started off with examples, beta. The first set of examples that we did was wherein we do not have any work in progress. No opening work in progress, no closing work in progress, no abnormal loss with partial degree of completion. Abnormal loss रह सकता है बेटा, but it cannot be partially completed. When you do not have anything that is partially completed, there is no question of you computing equivalent units. There should not be any work in progress. There should not be any abnormal loss with partial degree of completion. So cost per unit when you do not have any work in progress is always based on, even under the other cases, but it is always based on normal output. You're supposed to take total cost incurred, divide that by normal output. From the total cost incurred, you should deduct scrap value of normal loss. So your cost per unit, beta, we have written that in multiple questions. You will write total cost incurred minus scrap value of normal loss divided by normal output. Scrap value of normal loss क्यों deduct कर रहे हैं guys? Whenever there is any realization from scrap, it is reducing our overall cost. That is why we deduct it from the cost incurred and then divided by normal output. So when you prepare your process account, you will write all the expenses. You will write direct materials, direct wages, direct expenses, factory overheads by normal loss, value that at scrap. इसके बाद में you can have inputs transferred to next process. You will have abnormal loss or you will have abnormal gain. All these should be valued at cost per unit. Cost per unit, like how we determine now. Now, if there is abnormal loss, the actual scrap realization will be more than the amount of normal loss. Whatever is the scrap realization of normal loss has already been adjusted against the total cost incurred. Whatever is the scrap value of abnormal loss, it will be adjusted against the cost of abnormal loss. The balance net amount will get transferred to your profit and loss account. If there is abnormal gain, the actual scrap realization will be less than your normal loss. Though your actual scrap realization will be less than normal loss, what did I tell you? You will still consider scrap value of normal loss in computation of cost per unit. However, we are not going to realize that scrap value. Why are we not realizing that entire scrap value? Because of abnormal gain. So to the extent you are not able to realize scrap value, beta, we adjust that scrap value against abnormal gain. Let's say this example, beta. The total normal loss was 1000 units, but the amount of actual loss as such, beta, was only 700 units. We did not get scrap value on 300 units only because of abnormal gain. That is why we had to adjust the scrap value of 300 units against the amount of abnormal gain. The balance amount as such, beta, was transferred to your profit and loss account as net gain. These were the first 7-8 questions, guys. Whenever they use the word units transferred to next process, you will write by next process ka naam in your process account. If they use the word by units transferred to warehouse, you will write finished goods. But if they use the word units sold, then you'll write by cost of goods sold. So you can either have by next process, or you can have by finished goods, or you can have by cost of goods sold. Whenever they have cost of goods sold, they will also ask us to compute your P&L account. If there are any selling and distribution expenses, if there are any admin expenses, you will directly debit those expenses to profit and loss account. Those expenses have nothing to do with cost of manufacturing inventory. That is why you're going to debit those amounts as such, beta, in your profit and loss account. Is that clear? Only manufacturing expenses will form part of your process accounts. There was another question, guys, of royalty. In that question, we had abnormal gain. If you recall, beta, 16,000 kgs was the input, normal output was 14,720 kgs. There was an abnormal gain of 280 kgs. Now, royalty payable on production is a direct expenditure. It should be included in inventory valuation. But because cost per unit is based on normal output, we should include only royalty on normal output in your process account. Whatever royalty relates to abnormal gain, it will be adjusted against the cost of abnormal gain. You cannot include that in your process account. Any doubt in the first set of questions? Yes or no, guys? समझ में आया क्या बोला? After that, beta, we moved on to questions wherein we had work in process. If you have work in process, the cost per unit of a completed unit and the cost per unit, guys, of a work in process unit will not be same. Because the cost will not be same, guys, I said you will have to convert your work in process units into equivalent number of completed units. Equivalent number of completed units conversion is very simple. 1000 units 50% complete are as good as 500 units. 5000 units 60% complete are as good as 3000 units. But the problem here, beta, comes the degree of completion for different elements of cost will not be same. They will give us different degrees as such, guys, for material expenditure, for labor expenditure, for overheads expenditure. That is why you cannot have one single cost per unit for the entire product. You will have to compute separate cost per unit for material expenditure, separate cost per unit for wages, separate cost per unit for overheads. सबका equivalent units compute करना पड़ेगा. You will have to divide the respective expenses, beta, by those equivalent number of units. When you're computing cost per unit, I told you that you're supposed to deduct scrap value of normal loss. Even now you will deduct scrap value of normal loss, but you cannot deduct it from all the three elements. Whenever you're computing cost per unit separately for elements, we deduct scrap value of normal loss only from material component. What is the implied point, beta, here? The scrap realization is only for material component. That is why we reduce it from the material cost and then compute our cost per unit. Are we clear about this? अब जैसे example के लिए बेटा यहाँ पे we did many examples on this. Normal output, guys, whenever we have work in progress, is not computed using the input route. It is computed using the output route. In the first 7-8 questions, we wrote normal output as input minus normal loss. In the next set of questions as such, guys, जो भी with work in progress है, we write completed units plus closing work in progress plus abnormal loss. This will become your normal output minus abnormal gain, if any. Statement में we write normal loss, but we do not write anything under the equivalent number of units. यहाँ पे कुछ दिख रहा है क्या बेटा? नहीं. Here you will only write what all beta? Completed units, closing work in progress, abnormal loss and abnormal gain. एक एग्जाम्पल में बताया था बेटा तुम लोग को मैं, why do we deduct abnormal gain? You remember that? Here. This was the process account beta. I said you write to input by normal loss, by completed units, by work in progress to abnormal gain. First 7-8 questions we wrote input minus normal loss. Now beta we are writing completed units plus work in progress. If there's any abnormal loss you will add abnormal loss minus abnormal gain. Abnormal gain should always be written as a negative figure in the statement of equivalent units. Are we all clear about this? Yes or no guys? After beta we did questions on this equivalent units. We moved on to questions beta with opening work in progress. Okay? The minute opening work in progress comes into picture as such beta, the method of inventory valuation would be relevant. ये सबको समझ में आ गया? The method of inventory valuation will be relevant. We either follow FIFO method or we follow weighted average method. Now, under FIFO method guys, whatever is lying in the form of opening work in progress is assumed to be completed first. Under weighted average method beta, the cost per unit would be an average of both opening work in progress and current month expenditure. Okay? So when you compute cost per unit under FIFO method, you are supposed to divide completed units into two parts beta. How much is out of opening work in progress and how much is out of current month input. Whatever is out of opening work in progress, for that I am supposed to include only the work that is being performed in the current month. I should not include the work beta that was already completed. जैसे यहाँ पे screen पे beta total completed units are 1,58,000. Opening work in progress it is 8,000 units. बाकी का is out of current month input. Opening work in progress 8,000 units का degree of completion was 100% for material and 60% for labor and overheads. Meaning 100% work and 60% work was already completed. How much will you work on them in the current month? 0% for material, 40% for labor and overheads. So you are only supposed to take that 0% and 40%. Whatever is out of current month input as such beta, it has to be taken at 100%. This is for completed units. Divide them into two parts, out of opening work in progress and out of current month input. For opening work in progress, take only balance degree of completion. Are we very clear about it? Cost incurred may, you will only take expenditure that is incurred in the current month. You should not include cost of opening work in progress. Any doubt in this part? When you value completed units, FIFO method mein valuation of completed units involves multiple steps. You have to divide the overall units again into two parts. How much is out of opening work in progress? How much is out of current month input? Out of opening work in progress, work already performed is nothing but the amount that is given in the question as cost of work in progress. Work that you are performing in the current month is what you will have to value now. Are we clear about this guys? The degree of completion given for scrapped units in the question will only apply to abnormal loss. Abnormal gain agar aa raha hai, that is always in the form of completed units and it should be considered at 100% degree of completion. Normal loss you will always write 0% because you are going through output route. Output route mein it is only completed units plus closing work in progress plus abnormal loss minus abnormal gain. Normal loss nahi likh sakte. If you write normal loss in the statement, you will end up allocating cost to normal loss also. Do not do that. Are we clear about this? After that beta we did weighted average method. Under weighted average method guys, cost per unit is based on an average cost per unit. That is why completed units you do not have to segregate as to how much is out of opening work in progress, how much is out of current month input. जैसे यहाँ पे example में completed units are 14,000. Obviously opening work in progress would have been 4,000, current month input would have been 10,000. But because you're computing average cost per unit, you will take both work performed in the previous month as well as work performed in the current month. That is why you directly take 100%. You do not have to divide. However, when you take cost incurred, because you also took the units that were manufactured in the previous month, you should take the cost that was incurred on those units in the previous month and also add the current month cost. Only then you will compute your weighted average cost per unit. This 1.582 rupees, whatever you're seeing on the screen as such beta, is the average cost. This includes cost of both work performed in the current month as well as work already performed in the previous month. Any doubt in this part? The valuation of finished goods is very, very simple under weighted average method because you directly multiply by average cost per unit. So if you segregate FIFO and weighted average method, FIFO method में while computing equivalent units you should only take work performed in the current month. Under weighted average method you take 100% for entire inventory. FIFO method में while computing cost per unit you should only take expenditure incurred in current month. Under weighted average method while computing cost per unit you should take both current month as well as previous month opening work in progress का. Do not forget in these questions scrap value of normal loss should still be deducted from your material cost. After this you will understand that if you were to follow FIFO method they have to compulsorily give us degree of completion, because in equivalent units we only take work performed in the current month. If you were to follow weighted average method they need to give us cost bifurcation of opening work in progress, because weighted average cost per unit is such, but for that I should also know element wise cost. Are we clear, guys? Now normal loss they can give us 3 percentages. Normal loss can be given as a percentage of current month input, normal loss can be given as a percentage of total input, or normal loss can be given as a percentage of production. If they just say normal loss as a percentage of input, it is current month input, it is not total input. Only if they use the word total input, you're supposed to take opening work in progress plus current month input. Otherwise, as a percentage of input is only current month input. If they say normal loss as a percentage of production, then opening work in progress plus current month input minus closing work in progress. That is what is determined to be production. Then beta we moved on to the last point wherein we divided materials into 2 categories. Material 1 and material 2. This bifurcation comes beta into picture only if you are dealing with a subsequent process, that is other than the first process beta, and the degree of completion given for materials is not equal to. Now whenever we are dealing with the second or the third or the fourth process, guys, there will be 2 types of materials. One is the input that you're receiving from the previous process, the other one is the input that you're adding in the current process. Whatever input that you receive from the previous process is always 100% complete. If the degree of completion for materials beta is given, that will apply only to materials being added in the current process. If that is also 100%, then I do not have to divide between 2 types of materials, because the number of equivalent units will be same for both the materials. However, if degree of completion for materials is not given as 100%, you will have to divide materials into 2 categories. Material 1 is always 100%, whatever they give in the question will apply to material 2. Is that clear, guys? Yes or no? And last we did inter-process profit, wherein because inventories were transferred from one process to another process at cost plus markup, we are supposed to determine the amount of unrealized profit. Is that clear? Yes or no? So before we solve that question, guys, let's quickly revise the entire chapter beta once, and then we'll do that last question. So under marginal costing, guys, this chapter I told you first, marginal costing beta is a technique of costing. Absorption costing is also a technique of costing. A technique of costing beta will tell us what is to be included, what is not to be included in the valuation of inventory. For this you should know what is a period cost, what is a product cost. Product cost are those that are included in the valuation of inventory. Period cost are those that are directly transferred to profit and loss account. As for marginal costing, you're supposed to include only variable manufacturing expenditure in the valuation of inventory. As for absorption costing, guys, you're supposed to include both variable as well as fixed manufacturing expenses in the valuation of inventory. Irrespective of the inventory valuation method followed, do not forget all the expenses, whether they are variable, whether they are fixed, whether they're selling and distribution, whether they're manufacturing, will be transferred as such to your P&L statement. We are only talking about what is to be included in valuation of inventory. Expenditure kar rahe ho, it has to go to profit and loss account. There's no doubt about it. Alright. Iske alawa, but I also told you that there's something called as direct costing. Under direct costing, guys, irrespective of whether an expenditure is variable or fixed, we are supposed to include all direct expenses in the valuation of inventory. If there are any indirect expenses as such, guys, they will directly be transferred to your profit and loss account. Are we clear about this? Next, there are other terms like incremental cost or differential cost. I defined these terms in the very first chapter, cost concepts. Differential cost is the difference in total cost under 2 different alternatives. Incremental cost is when you shift from one activity level to another activity level. What is the increase in your total cost? Though the name of the chapter is marginal costing, guys, I told you that this chapter primarily deals with what beta? CVP analysis. cost volume profit analysis. The advantage of dividing expenses beta into variable and fixed is that over a shorter period beta, it is only variable expenditure that is incurred whenever beta you increase your manufacturing activity. Your fixed expenses guys remain constant irrespective of the output level. So when you're taking decisions as such guys over shorter periods, you will want to recover only your variable expenses. You will not want to recover your fixed matlab, if you have an option of recovering, well and good, but even if you recover your variable expenses, that is sufficient. So for this beta, I told you that we're supposed to establish a relation between your cost, volume and profits. Cost consists of both variable cost and your fixed cost. As your sales volume changes, it is only variable cost that will change proportionately. That is why beta, your change in sales will not be the same as change in profit. Percentage changes. We've also learned about this concept under operating leverage. For this beta, the very first term that we defined was PV ratio, contribution per unit. What is contribution per unit guys? Selling price per unit minus variable cost per unit is your contribution per unit. Using contribution per unit, we have defined PV ratio. What is PV ratio? The proportion of contribution in the revenue of the firm is called as your PV ratio. This will also be equal to 1 minus variable cost ratio. If your variable cost ratio is 60%, that means your contribution is 40%. If your variable cost ratio is 70%, that means your contribution is 30%. So 1 minus variable cost ratio will be your PV ratio. Profit volume ratio is based on only two factors. One is selling price per unit, the other one is variable cost per unit. As long as your selling price per unit and variable cost per unit will remain constant guys, your PV ratio will not change. If your selling price per unit or your variable cost per unit changes, PV ratio will change. It's a relative term. Irrespective of your sales volume also beta, PV ratio is supposed to remain constant. Alright, so the minute you see in any question beta that your selling price per unit is changing, you will immediately write beta that your PV ratio will change. Correct beta Arpita? Even if there's a change in the amount of fixed cost as such beta, your PV ratio will remain same. Volume change हो रहा है, PV ratio will remain same. Fixed cost change हो रहा है, PV ratio will remain same. Only if they tell us that selling price per unit is changing, you will immediately write that PV ratio will not remain constant. We've also learned another formula guys for PV ratio. That is when profits are given at two different sales level. The formula beta is what? Change in profit divided by change in sales multiplied by 100. Change in profit divided by change in sales into 100 beta will become your PV ratio. After learning about PV ratio beta, we moved on to the concept of break-even point. What is break-even point? Formula for break-even point beta is fixed cost divided by PV ratio or contribution per unit. But break-even point is the level of sales volume guys at which your profits are zero. What profits are we referring to? Operating profits or financial profit? Operating profit. EBIT as such beta. So in order to get your break-even point guys, you will have to arrive at the sales volume at which your contribution is exactly equal to the amount of fixed cost. That is why beta we write break-even point as fixed cost divided by contribution per unit or fixed cost divided by PV ratio. If you want the answer in rupees, you will write fixed cost by PV ratio. If you want the answer in units, you will write fixed cost divided by contribution per unit. Similar to break-even point beta was cash break-even point. What do we do beta under cash break-even point? Objective is to recover only cash fixed cost. That is why we write cash fixed cost divided by contribution per unit or PV ratio. इसके बाद में बेटा we did the concept of margin of safety. Margin of safety is the excess sales that you realize as such beta over and above your break-even point. That is why margin of safety beta will be equal to your total sales minus break-even sales. Break-even sales will not change with the change in total sales. Break-even sales depends on your fixed cost, depends on your PV ratio. Break-even point constant रहता है. As total sales keep changing, your margin of safety will keep changing. Now, because you have already recovered the entire amount of fixed cost guys from your break-even sales, whatever is the amount of contribution that you are realizing from margin of safety itself will be your profit. Profit is nothing but the amount of contribution that you receive from margin of safety. For this beta you can write margin of safety in rupees multiplied by PV ratio, or you can also write margin of safety in units multiplied by contribution per unit. हमेशा याद रखना बेटा that margin of safety is not profit. एग्जाम में बच्चे गलती करते थे, डायरेक्टली राइट profit is equal to margin of safety. Profit is only the contribution that you are receiving from margin of safety. Are we clear about this? Next beta, we did the concept of sales for a desired level of profit. To arrive at sales for a desired level of profit as such, guys, you are basically adding, guys, your margin of safety and break-even sales. Break-even sales का formula beta was fixed cost divided by contribution per unit or PV ratio. Margin of safety beta will become profit divided by contribution per unit. यही है ना? Profit divided by contribution per unit or divided by PV ratio. Therefore, the formula beta for a desired level of profit is fixed cost plus profit divided by contribution per unit. If you want the answer in rupees, you will directly divide by PV ratio. Are we clear? कोई भी question में solve करना नहीं आ रहा है, the first thing that you will do beta is present profitability statement. Your objective. If they give us break-even sales, if they give us fixed cost, I can immediately compute contribution per unit or PV ratio. If they give me margin of safety or profit, I can again compute PV ratio or contribution per unit. If they give me selling price per unit, variable cost per unit and fixed cost, they themselves are giving us all the details के साथ बेटा, we will compute all of this normally. ठीक है? Any question beta, they will either give us all the details straightforward, that is selling price per unit, variable cost per unit and fixed cost. If this is given, all the values can be computed, or they will give us break-even sales beta and your fixed cost. We can compute PV ratio using this, or they will give us break-even sales and PV ratio. तीनों में से एक missing रहेगा बेटा, you will compute the other factor. If they give me margin of safety, profit as such, guys, I can still compute my PV ratio. Is that clear? After that beta, we did multiple products. All of these formulas as such beta were based on only one product. If you have multiple products, guys, I said the answer, guys, will depend on the proportion in which the products are being sold. For this, sales mix should be given. If sales mix is not given, there is no way beta that you arrive at the answers. So if sales mix is given beta, will that apply to sales in rupees or will that apply to sales in units? Sales in units. Agar sales mix 1:4 diya hua hai beta, that means for every 1 unit of the first product, we are selling 4 units of the second product. To arrive at break-even point, you can either compute contribution per batch of 5 units in my example, or you can write fixed cost divided by weighted average contribution per unit. ठीक है? You either write fixed cost divided by contribution per batch, or you write fixed cost divided by weighted average contribution per unit. If you are taking contribution per batch, do not forget that your break-even point that you're computing is also in batches. That into 1 into 4 will be the total number of units that you have to sell, guys, of product A, product B. If you take weighted average contribution per unit beta, you will get directly answer in units. That answer you will have to divide in the ratio of 1:4. You will not write into 1 into 4 again. That is if multiple products are given. Weighted average PV ratio cannot be computed by using sales mix ka ratio, guys. For this you will need revenue ka ratio. उससे better, what did I tell you? Directly present total column. Total sales, total contribution. You will directly get your weighted average PV ratio. इतना याद रखना, whenever multiple products are given, you're always supposed to compute on the basis of per unit only. On the basis of number of units, not on the basis of total values. Are we clear? Yes or no, guys? After that beta, we did the concept of break-even chart. Break-even chart mein beta, you're supposed to plot what all curves, what all this thing beta, lines, variable cost, fixed cost, total cost and total revenue. The point at which total cost curve beta cuts your total revenue curve itself will be your break-even point. याद रखना, you're all going to get straight lines because our variable cost per unit will remain constant, our fixed cost also will remain constant. To plot all of this, you need 2 points at every level. Variable cost के लिए 2 चाहिए, fixed cost के लिए 2 बेटा. Fixed cost एक ही रहेगा, sorry. Total cost 2, guys. Are we clear about this? Volume is supposed to be taken on x-axis. Your cost and revenues will be taken on y-axis. A modified form of break-even chart beta was profit volume graph. What do you do under profit volume graph? You take volume on x-axis, you take profits on y-axis. Because you are plotting profits beta, you will have both positive figures and negative figures. Y-axis mein beta, you'll have to go into negative zone also. In profit volume graph, guys, wherever your profit volume line touches the x-axis, that itself is the point beta where profit is 0. So this beta will become your break-even point. ठीक है, guys? After all of this, beta, we moved on to the application of CVP analysis. The very first thing that we did under application of CVP analysis, beta, was key factor or limiting factor. Guys, सिर्फ ऐसे करने से revision नहीं होगा. This is only revision of the concepts. You still have to practice all the questions. For key factor or limiting factor, guys, I said in case an organization as such, beta, has a limiting resource, something that is putting a limitation on the total number of units that can be manufactured and sold, you will have to decide product mix on the basis of contribution per unit of limiting factor, not on the basis of contribution per unit of finished product. This limiting factor can be machining capacity, it can be labor capacity, it can be raw material, guys. Capital अगर limiting factor है वो अपन FM में पढ़ेंगे. Same concept will come under FM also, but the concept is called as capital rationing. That is where capital will be a limiting factor and you will have multiple investment opportunities. We will decide which investments are supposed to be taken up. So यहाँ पे बेटा either raw material or machine hours or labor hours. Even if you have 10 different categories of machining capacities, you will have to take only that machine beta which is a limiting factor. Even if you have 3 different grades of labor or 4 different grades of labor, only one type of labor is a limiting factor. You will have to divide by labor hours of only that labor. Confusion था तुम्हारे को पहले, समझ में आ रहा है? So you write contribution per unit, divide that by what? Whatever is the number of hours of the limiting factor required. This will give us contribution per unit of limiting factor. You rank the products on the basis of this contribution per unit of limiting factor and then allocate the resources, guys. अगर machine hours allocate करना है, you will have to consider maximum demand. Whichever product is ranked first, that product beta will be allocated resources. You will continue like that. What if all the resources, you can manufacture only one product beta? There was one question, guys, you were manufacturing parts for an airline company or something, guys, aircraft company. So if you can manufacture only one product as such, beta, ranking to aayega nahi? Yes or no? What do you do, beta, is you allocate all the resources to one product, check what is the amount of profit that you're able to make. Likewise, you will again check, beta, if all the resources are allocated to the other product, what is the amount of profit that we are making. Whichever combination gives us a higher amount as such, beta, that alternative will be selected. After this, guys, I said we either will have a case of excess demand or you will have a case of excess supply. Excess supply, beta, is where we are not able to fully utilize our resources. Excess demand, beta, is where we do not have sufficient production capacities, beta, to meet the entire demand. If there is excess supply, guys, it means you have spare capacity available. If there is spare capacity available, guys, only for short-term decision making, decisions should be taken on the basis of variable cost and specific fixed cost, if any. चाहे वो excess demand रहने दो, excess supply रहने दो, बेटा, you're supposed to take incremental cost. Incremental cost comprises of variable cost, it comprises of specific fixed cost, and it also comprises of opportunity cost. In case you have excess supply, there will not be any opportunity cost. Opportunity cost per unit से compare नहीं करना है. You have to also check how many units are you foregoing of the other product, बेटा, and then arrive at opportunity cost. So in case you have excess supply, you will only have variable cost plus specific fixed cost. None of the questions that we did, beta, had specific fixed cost. At CA inter level, they only bother about variable cost. So concentrate only on that part as such, guys. Just in case they blindly copy a question from CA final ka earlier old syllabus, beta, that is why I explained to the other concepts also. So you will always compare incremental cost, beta, with incremental revenue. As long as your incremental revenue is more than the amount of incremental cost, you're going to take up a project. Excess supply के बेटा decisions क्या थे, guys? I said if you receive a special order or export order as such, बेटा, and you have spare capacity, this is how you will take a decision. Excess demand में बेटा, what will you do? You will consider opportunity cost also. Minimum price अगर पूछा, क्या करोगे? Minimum price is equal to incremental cost. Most likely incremental cost, beta, is going to be your variable cost. But अगर opportunity cost है, you have to include that opportunity cost also. You have to include your product specific fixed cost also. Are we clear? Any decisions, beta, here will be based on this. Then, beta, I think there's some problem with that, beta. Let us start with shutdown point again. Shutdown point arises, guys, when the economic condition as such, guys, is not favorable. But then you're expecting that the market demand is going to change. Market conditions as such, beta, will get better. So, shutdown point, beta, we decide whether we should continue to manufacture or should we shut down. For this purpose, I told you we divide our fixed cost, beta, into avoidable fixed cost and unavoidable fixed cost. Avoidable fixed cost is that portion of fixed cost, beta, that you incur only if manufacturing activity is undertaken. Unavoidable fixed costs will be incurred whether or not beta you undertake manufacturing activity. That is why beta we say that unavoidable fixed cost is irrelevant for decision making. To arrive at your shutdown point beta, I said you can take the volume as X, compute profit under both the options, equate them as, you'll automatically get the indifference point. Or else you can also write avoidable fixed cost divided by contribution per unit. This will be the volume as such guys, at which your losses under both the alternatives will remain same. More than this volume guys, if the expected demand is more than shutdown point, what will you do? Manufacture. If the expected demand is less than shutdown point beta, you shut down the business premises for a temporary period again. Is that clear? After shutdown point as such beta and all of these concepts we did cost indifference point. Cost indifference point is in relation to multiple cost structures. Irrespective of the cost structure that you select, your revenue per unit is not going to change. You're still going to make the same amount of selling price, revenue guys. So in order to arrive at your cost structure guys, you will have to equate the total cost under two alternatives. That is, sum total of variable cost and fixed cost under one alternative will be equated to sum total of variable cost and fixed cost under the other alternative. You will take volume as X units, you will automatically get the indifference point. Less than the indifference point, you're supposed to select the alternative beta with a lower amount of fixed cost. Tapesh, can you go out of the class? More than the amount, more than the amount of indifference point beta, you select the alternative with a higher amount of fixed cost. I also said beta there's a direct formula for that indifference point. That is difference in fixed cost divided by difference in variable cost per unit. Alright guys. If you have three different cost structures given beta, I told you, you will have to compute three indifference point between A and B, between A and C, between B and C. For the purpose of analysis guys, I told you, pick up the least indifference point first. Less than that indifference point, one alternative will be preferable. More than that, ignore that alternative. Say for example, among the three alternatives here guys, A and B ka least indifference point hai. And less than that indifference point, you prefer A. More than that, you're supposed to ignore A. So the only two alternatives that are left are B and C. So the indifference point between A and C will become irrelevant. It will not be relevant for the purpose of your decision making. Alright kids, this was about cost indifference point. And then beta there was one question in which we also did break even point with opening stock. Agar opening stock ka variable cost alag tha beta last year, what are we supposed to do? First sell opening stock, see what is the amount of contribution that you're getting from your opening stock, deduct that from the amount of fixed cost. The balance fixed cost you will recover beta by selling units produced in the current year. Yaad hai wo question? Then beta finally we did profitability statements as such guys under marginal costing and absorption costing. Under marginal costing as such guys, you will still present sales minus variable cost, contribution minus fixed cost profit. This variable cost I told you beta, you will be segregating into variable manufacturing expenditure and variable selling and distribution expenditure. Also guys, you are supposed to show adjustment of opening stock and closing stock under variable manufacturing expenditure only. Because manufacturing expenditure will be in respect of units manufactured, but then in profitability statement we are supposed to take only value of units sold. We cannot take the entire value. Is that clear? Under absorption costing you will write sales minus cost of goods sold. That will become your gross profit. Gross profit minus your all the indirect, all the expenses other than manufacturing expenses, but indirect expenses, all other expenses other than manufacturing expenses guys, to arrive at the amount of profit. COGS mein you will have to show variable manufacturing expenditure and fixed manufacturing expenditure. Fixed manufacturing expenditure beta hamesha absorbed lena hai, not actual. If they give us normal capacity in the question, you're supposed to arrive at absorption rate and then arrive at the amount of overheads absorbed. Is that clear? Once you do this, you will show the adjustment of opening stock and closing stock. You will arrive at COGS. Sales minus COGS is gross profit. If there's any under recovery or over recovery, you adjust that in the end as such beta and arrive at the amount of actual profit. Under recovery agar hai to minus karna. If there is over recovery, you're supposed to add it. If they ask us to show reconciliation statement between absorption costing and marginal costing, the only reason for difference in profit will be valuation of stock. There will be opening stock and closing stock valuation. We normally start with profit as per marginal costing and we go towards profit as per absorption costing. Hamesha yaad rakhna beta, value of stock, whether it is opening or closing, is usually higher under absorption costing. So on account of closing stock, your absorption costing profit will be higher. On account of opening stock, your absorption costing profit will be lower. That is why you add the difference in closing stock, you deduct the difference in opening stock. Is that clear, guys? That's the end of this revision.